Right. In this video, I'm going to be discussing with you the capital flow secret code. This secret I'm about to share with you is going to change your trading experience forever. Trust me, if you can apply these secrets to your trading, it's going to shift a lot of things. Uh, capital flow, um, capital flow secret code. This is indeed a code and it's a secret code. I don't know if you have heard of it anywhere, but I'm going to be sharing it with you for free. I just want you to pay close attention to me. And this secret code is what at potential miners we call currency grouping. Currencies grouping. I want you to listen attentively because this is very important. In fact, this discussion will help quite a number of traders that they are really not in tune with flowing with the fundamental uh, analysis or sentiment analysis. It will just help you to have like a snapshot of how to really trade with a touch of blending with what the fundamentals and the sentiment stance is saying. And so currency grouping from the perspective of the fundamental and sentiment position, global position. Now, this is very important because uh, this is one of the things that you need to be able to make the right selection. And if you are not trading with our trading system, for instance, at Potential Miners International, you might not have maybe the routine that will help you to do identification of what to trade. Because at Potential Miners, the first thing we do is identification protocol. That's where we analyze the fundamental indicators, the fundamental global geopolitical stance, to be able to identify the particular set of assets to trade or currency pair to trade in this context now. Now, after that, we now do what we call optimization protocol, and this is where we do sentiment analysis. We have a whole lot of analysis to do to be able to track the sentiment of the market under this optimization protocol. And of course, the next thing we'll now do, or the last thing we'll do, is what we call initiation protocol, and that's when we come to the chart and begin to look for position to trade. But if you are a trader and all of this seems like a very long, process for you, but you still want to really understand how to really trade, selecting the best pair of currency, I want you to listen to me and pay close attention. Now, currencies grouping, we have three major groupings, and I'm going to go through them very quickly so that this video is not going to be very long. The first group is what I call group A, and is the grouping for commodity high yield currencies. This is very important, and this is the first group, and I'm going to be identifying the currencies under this group. We have the AUD, that is the Australian dollar. Number two, we have the NZD. This is the New Zealand dollar. Then number three, we have the CAD, that is the Canadian dollar. Canadian dollar. Now, this is the first grouping, and this is very important. Don't worry, at the end of this video, if you can stay with me to the end, I'm going to give you like a bonus what you can use this knowledge I'm giving you to do specifically. How to pair this grouping, how to pick currencies from each of these grouping, then you now position yourself, and the advantage of doing so, I'm going to share it with you uh, towards the end of this video. Now, these currencies, they are largely commodity currencies. It is very important for you to know because uh, trading in the financial market, especially the forex market, has been bastardized by a lot of people that are not really guarded. I'm not going to say that they are just social media influencers because they have their own contribution to in the industry. Nevertheless, a lot of people they just get to the chart and pick currency to trade. If they ask them what is your reason for picking this particular currency pair, they will probably say, I saw the chart, it's giving me like indication of going up and I feel let me buy. No, if you want to start to trade like a professional forex trader, you really need to have valid or reasons, backing every decision or choice that you make in the forex market at any point in time. If they ask you, why do you do this? You must be able to tell us, this is the reason why I'm doing this, and it's because this is part of my trading system or trading strategy, so that you remove emotion from your decision making process. Now, these currencies, they are commodity currencies. The implication of that is that, you see, these countries, they are largely uh, uh, massive exporters of commodities. For instance, Australia, they are massively into the export of iron ore and coal. This forms the major part of their export merchandise, and it is very important that you understand how this can really affect the price of the currency, as it were. In this case, now Australian dollar. So if they export more and if there is demand for their export, it means that a lot of people will have to demand for Australian dollar. And of course, in the same way, if there is a reduction in the demand or the export falls, whatever reason that causes that, is going to affect the demand for Australian dollar. The same way for New Zealand dollar, this country, they are rich in dairy products like powder milk, like butter and cheese and the likes, and they export them massively to every part of the world. Now, the export of these commodities influences the position of their currency. And it's important for you to take note of this. Although you might not necessarily need to get the data set for the major exports, that's not your focus. But you need to be aware that these countries, they are exporters of commodities. And you should be able to identify each of the commodities. For Canada, they are exporters of energy products. Be it natural gas, be it crude oil, they are very rich in export of this commodity. The implication is, whatever happened to any of these commodities, in fact, you can even track the movement of the prices of each of these commodities if you have a very robust charting platform that can show you the price and the movement of these commodities. Now, these are the first group of currencies, and it's very important for you to note. Now, I'm going to move to the second group, and of course, you can as well do your research to see more about some of these products that or commodities I'm talking about with respect to each of these countries is going to really help you. The second group is what I call the Group B now. Group B, these are low yield, or let me say safe haven low yield currencies. In fact, if you are trading forex and you really don't know about this group of currencies, I bet it with you, you must have burnt your fingers a lot of time because of that ignorance. So I'm going to quickly go through them. The first one is what I call CA share, Swiss franc. The second one is JPY, Japanese yen. The third one, in terms of currencies now, is the US dollars, USD, United States dollar. And of course, you don't want to leave out gold, although it's a commodity, but then XAU USD, you don't want to leave it out, gold. So these are safe haven currencies. Now, because we are dealing with currencies now, I just want to leave out gold. It's not really our focus, But then just know that gold is also a safe haven. I don't want to do that. So just let me bold it now. So this is safe haven in itself. Is that okay? Just take note. But then let me clear it, having established this, so that you will know that part of the safe haven asset is gold. Now, having established that, let me clear that. And the group B now we now have for currencies, because this secret is going to really help you the way you pinpoint, what to trade. So, and I don't want to mix a lot of things up in this video. So now, the third now, let me quickly say one or two things about this safe haven. Now, the reason why they are safe haven is because largely majority of these currencies, they maintain low yield interest rates, or very low interest rate. For instance, as of now, this is June 2025. Swiss franc, the interest rate for Swiss franc is 0%. Amazing. And that of Japanese yen is around 0.5 percent. In fact, movement of capital is induced by this low interest rate that these countries maintain, and that makes it a safe zone for investors in situations where we have risk off. I don't want that we have a lot of concept that around this capital flow, but then I really want to focus on this secret code I'm trying to give you, which is currencies grouping. Now let's move on. Now, and of course, dollar is very stable economy, even when is not even if they don't the interest rate is not low. When there is a risk of, people tends to move their money into dollar, of course. Now let's now go to the third group, which I call group C. You see, this group C is what I call dollar aversion currencies. Dollar aversion currencies, and it includes the euro, and the GBP, Great British Pounds. You see that? Dollar aversion currency. What do I mean by this? It is very important for you to note that uh, euro and to a large extent GBP, they are currencies that attract capital flow when there is dollar aversion. What do I mean by dollar aversion? When investors lose uh, uh, interest or confidence in dollar, it might probably be because of the economic stance or political stance at a particular time, engineered probably by maybe a particular ruling party or a particular leader that is trying to instigate some set of policies that investors feels that is not really going to put the economy of United States into a very good shape looking forward. So there is going to be a version of dollar. In fact, currently from since March of this year, 2025, we are in June now, there has been dollar aversion. That is why if you go and check the DXY as of today, the DXY is on a downward trend, which is showing us that there is dollar aversion. Now, when there is dollar aversion, these two currencies, especially euro, is going to attract capital flow. This is pound, okay? Capital flow. And of course, you want to take note of this such that anytime you see that, in fact, most of the time when dollar is falling, you will see that euro will be rising. It's like euro, most times they call it anti-dollar. So, and GBP behave in the same similitude most of the time. So now one of the reasons why this is just logical for investors is that you see euro and GBP, sorry, they are currencies for a group of countries. In the case of euro, this is a currency for the eurozone, and eurozone we have like 19 or 20 countries. So people believe that if dollar is not safe, I can push my capital into a zone rather than just one country. For eurozone, we have the likes of Germany, we have the likes of Spain, the likes of Italy, the likes of Finland, the likes of Netherlands, and so on. These are countries that makes up the eurozone. So when investors sees that the economy of the United States is not in a good shape, and maybe there is a particular geopolitical tension that is affecting the stability of the economy of United States, people tends to move their fund away from dollar. Now, the implication of this is that these currencies, they are going to gain value as dollar loses value. You need to take note. Now, these are the three groups, and like I promise, I don't want this video to be very long. Like I promise, what do you do with this information? That is what is most important. And that is where I'm probably going to go to the chart to show you a few examples to really put what I'm discussing into perspective. Now, advisably, you want to select across group. You don't want to trade within the group. Of course, this is not the rule of thumb for everybody that trades forex. It's just that because on a larger scale, we believe that when you trade with the trend, you are in a better position to enter a positive or a trade that ends as a winning trade. Now, when you pick currencies across these three different groups, is really going to show you, it's going to play a market that has a very clear trend. I'm going to show you examples so that you will understand what I'm discussing. So of course you can still trade within the groups, but you must have a very valid reasons why you are doing that. Because on a larger scale, movement of currencies within the group, especially the commodity high yield currencies, does not really give us clear trend. This is very important for you to note. If you want to trade within group, you can still trade within the group of safe haven low yield currencies. But you see group A and group B, if you can avoid it, you can avoid trading within the group. What do I mean by trading within the group? For instance, for group A now, suppose you want to trade, you now pick AUD CAD or AUD NZD. As much as you might still enter a profitable trade, with this pair, the likelihood for the trade not to trend the way you expect it is very high. In fact, in most cases, if you check the position sentiment of big players in the market as released by the Commitment of Trader report, COT report, most of the time the commodity high yield currencies, they are always with the same tone of sentiment, which means if investors are net short on Australian dollar, the likelihood that they will also be net short on New Zealand dollar is very high, and the same thing for Canadian dollar. And if you have something like that, you will not have a lot of volume in the market. In fact, the most important concept to take to heart in this discussion of having not to trade within a group is the fact that there won't be volume. Because we are dealing with capital flow, when you trade across group, the likelihood that money will flow away from a particular group, let's say group B now, which is safe haven, into another group is very high. And when that money flows, it's going to flow into another currency that you have picked. So as money is flowing away from a particular currency, it's flowing into another currency that you have picked. For instance, if you pick Canadian dollar from the group A and you now merge it with, let's say, Japanese yen, in a situation that you have risk off, capital is going to flow massively away from Canadian dollar. And of course, Japanese yen, being a safe haven, has the likelihood of attracting, the flow of capital. So as capital is flowing away from Canadian dollar, you have capital flowing into Japanese yen. That is what is going to give you a very clear trend. I'm going to give you an example now so that you can see what I'm talking about. Now, let's now pick example. So from this particular grouping now, assuming this is a live, session, I would have probably asked in the comment section that somebody should pick. But then, because this is just a video that I'm putting up, let me pick from the commodity, the group A now. Let me pick Australian dollar. Now, let me now pick Swiss franc from group B. So one from group A, which is commodity high yield currencies, and one from group B, which is safe haven low yield currencies. Now let's now go to the chart. Let's see what is our position for AUD CHF. We want to see now that what do we have for AUD CHF. Let me clear this. Let me take it to the weekly chart so that you can see for yourself what I'm talking about. Now, just take a look. I'm going to, go back as far as I can go, into the past so that you will see how this particular currency pair play out. Just imagine, this massive move. This is the effect of capital flow. Capital flow. All this, and this capital flow is what we call impulse wave in technical terms. In fact, subsequently, I'm going to be releasing videos that will be dissecting the technical aspect of our trading system. You are going to love it. But then let's just, look overview. Just look at this particular, since June 2022, this market has been trending down. It means that, of course, we use directional bias and the tool is active on my chart. That is why I can really tell you that it has been trending down. Even if I log the tool, you can see for yourself that this market has been trending down. It's just that the tool will tell you the particular time that the directional bias is evident based on this particular tool that we have been using. I've released the video that explains this particular tool, on this channel. You can look for it, how to gauge the directional bias in 5 seconds. I think that's the title of the video. Now, just go back in retrospect. Just look at it. Look at how this market has been trending. A lot of people will probably not pick AUD-CHF for whatever reason. In fact, some traders have been trading for years and they have not traded AUD-CHF. Why? Because it doesn't sound like, the conventional currency pair that will give them money. But look at this. 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 This market, if it's trending down, it will just trend down. If it's trending up, it will trend up. You can see very clear, and this is because you are picking from across groups. One from commodity high yield currencies group, which is group A, and the other from the safe haven low yield. You will just look at this. Look at this. Go back into the past, you will see the same way. This is, we are currently in 2004. You see, if it's on a buy, is to just give you a clear trend. There's no way you will understand all of this and you can apply it and you will not make money from the forex market. Trust me. Trust me. Now let's now go back so that we can let me go back to gold so that we'll continue our discussion. Let's continue our discussion in that light. This is our discussion so that you understand what we have done. So this is the grouping now. Wow. Oh, okay. I really feel that let me do this. Let me do this. Let me see if I can get us back. Oh, I've lost. Okay. Let me go back to. All right, we are here now. Okay, here we are now. This is what we were discussing. And of course, I just want to come back to this place to pick another example. And after that, I will still pick from cross group. Then after that, I will now pick from the same group. You will see the likelihood of having a very, a not too clear, market. So let's say we pick USD and let's pick Euro now, for instance. This is a cross group. We are picking group B and group C now. So we are picking from safe haven low yield currency and dollar aversion currencies. So let's now go to Euro USD. Let's go to Euro USD. Cool. You see, let's go to the weekly chart. I want you to just observe this. Just observe as I go back in retrospect. Just imagine this trend. The reason why this is just clear is because when dollar is being dumped by investors, the likelihood of capital from that dumping of dollar to flow into euro is very high. It's very high because it's dollar aversion currency. Look at this now. In fact, this Euro USD, usually catches the attention of most, beginner traders because they have clear trend. They will just take whatever and it's not because you just feel like trading it. Year in, year out, day in, day out, it will always give you a clear direction. If it's buying, you will know it's buying. And if it's selling, it will give you, just imagine this movement. Just imagine this movement. Just imagine. Just imagine. Well, I don't want this video to be very long. And so I'm going to just go back. I will just go back to gold. Let's now see that we pick Euro GBP is within the same group. Within the same group. Within the same group. Within the same group. So that you understand where we are coming from. You understand where we are coming from. So yeah, I think we are good to go now, so that you understand where we are coming from. Now Euro GBP is the same within the same group. Now let's now go to Euro GBP. Let's see what we have. As much as it's not as if you cannot trade it, but you will not have, just look at it. Of course, when you look back, you can still have, some situation where you have trend line and like that. But for majority, just imagine you are trading within this period. You know, is very dicey. Are you getting it now? So for you to pick within a group, you must have valid reason why you are doing this, such that you will be clear that there's going to be a very clear directional bias for the currency pair that you have chosen. Just imagine that you are trading at this moment, it's just going up and down, and of course you can still take a profitable trade, but then you will need to really be good at what you do. Now, this is just a caption of our discussion on capital flow, and we'll still continue this discussion. And of course, I want you to really apply this to your trading, so that you can get the best out of any trade position that you enter. I'm going to be releasing subsequent video. This time around, I will now be going in depth into the technical analysis, where I will now be showing you how we position for trade, the core concept that we look out for, and how we take our trades at Potential Miners International. Until I see you in the next video, thank you for listening. God bless you.